Hello, everyone, and welcome to the December 2022 Real Estate Market Review for San Jose, California. This is our opportunity to kind of take a look overall at what's happening in our market, take a little look at what's happening in the month of December, but also look back, see where we've been, and hopefully with some of that information, we can figure out where we might be going in the real estate market. Lots of changes have been happening, and I think we'll be covering all of those in today's review of the market. Now, if you'd like to get in contact with me, the best way to do that is through soldbyrobert.com. From there, you'll find all my great tools for buyers and sellers. For sellers, you can get an instant home value estimate right there on the front page. Or if you would like, you can get a more in-depth comparable market analysis by reaching out to me directly. And of course, for my buyers, you can get access to the search tools I provide there, where we can work together to try and help you achieve your real estate goals. All right, let's go ahead and jump in and take a look at what we have here. We're going to go ahead and look at the total inventory for the month of December. And as we've seen with pretty much every other area, a dramatic increase in the inventory or total available homes. We did the Morgan Hill market analysis just the other day. So if you'd like to check that one out, you can find that on YouTube or at my website at Sold by Robert. But in terms of San Jose, we had 469 homes in December of 2022 on the market. So think of that as the number of homes the buyers have to choose from. And for you sellers, think about that as the competition that you have for the attention of the available buyers. Now, before we go too far forward in this, let me just point out this graph is intended to solve two problems at the same time. One, year-over-year comparison. So you can see I've got December of 2021 right next to December of 2022 right here on the right-hand side. So you can visually see what the difference is. And then, of course, the percentage increase from last year is 74%. But then we also see that I do the months preceding so that we can look back and see where we've come from, but then also do that year over year. And the reason why year over year is important is because you're eliminating seasonal influences, right? Because obviously there's going to be different activity levels in a July than a December. So we correct for that by doing a year over year comparison. The only other thing to keep in your head as we look at these numbers is remember that 1 year ago, we did still have much lower interest rates. And in many of these graphs, you're going to see very clearly where those interest rates took a jump. But if we look back to try to tease out some things we might be able to use to anticipate what we can expect in the coming months in 2023, we can see we peaked in July of 2022 with 1,113 listings, total listings, active inventory. And we've been in steady decline, which is actually not bad. And obviously, we're still, compared to the year before, much higher. It'll be interesting to see what happens once we get to the point where 1 year earlier is after the increases in interest rates. But for right now, obviously, the market has had a pretty significant change in terms of year over year. In terms of where we think we're going, in December of last year, we saw pretty much a steady increase in inventory. Once we got past December, we saw an increase in January, moving right on up until we peaked in June and July. It wouldn't surprise me if we see a very similar scenario this time. It wouldn't also surprise me if we tend to see perhaps a little bit of an increase, a bigger percentage increase month to month, as potentially more sellers want to try and take advantage of the market before they see it getting even worse. So that might be a thing that happens. I've had a few folks reach out to me. So the reason why I mention that is anecdotally, I've had a few people reach out to me about potentially selling a property that they own, concerned that for an extended period of time, prices may become depressed and that their opportunity to pull out profit is now rather than waiting 6 months or a year. If we take a look now at new listings, and these are sellers who decided to go ahead and put their homes on the market in December of 2022, and that's always an interesting thing anyway. If you're typically you don't list your home in December. The reason is I think obvious for most folks. It's wintertime, it's cold, it's potentially rainy, it is a holiday period. So all of those things put together usually indicate a seller who would rather not deal with that. So if you're thinking about selling and you're able to list in December, most sellers will decide to then list in January or February so that they skip the holiday period. When I'm looking at listings and I see a home that's been listed in December, I'm interested to figure out if that is the result of a seller who really needed to get on the market as soon as possible, because that may spell an interesting opportunity for some of my buyers who might be interested in that property. All right, so new listings, down 34% from the same time last year. We can see that in December of 2021, the number of new homes added to the market was 360. This year in December of 2022, it is 237. So again, a dramatic decrease indicating a lot of sellers just simply not jumping into the market. Interesting given what we've seen in terms of, I would have thought, and this is something that just didn't happen. If you look back in past months where we really had interest rates jump in March, April timeframe, it really surprises me that we didn't see more sellers coming onto the marketplace then. I know that if I'm someone who's interested in selling my home and I see numbers moving in a direction that indicate fewer buyers will be out there on the marketplace and the market's going to get tighter, I know if I was thinking about selling, I would definitely accelerate my plans. And we really didn't see that. There was a steady decline. April and May, we had pretty flat number of homes being added to the market. But then from June on, just really a dramatic drop all the way up until December. If we look at the last year numbers to try to educate us on what might happen as we head into 2023, we can see folks tend to jump onto the market right out of the chute in January, so we may see a big jump there. I think it'll still be down on a year-over-year basis, but as a percentage jump from December to January, I think it'll be on par. I don't think we're going to see any market-shattering changes in terms of what we see with new listings in San Jose. Let's go ahead and take a look at homes sold. Now, one thing to keep in mind with homes sold numbers is this actually represents an offer that was accepted in the previous month. So all of these are escrows that closed for an offer that was accepted most likely in November, possibly even October. So this is a little bit of a lagging indicator of what's happening in the market right this minute. And given the amount of change we've seen in sales prices and asking prices, I think it's good to understand that reality. But in terms of total number of homes sold, we're down almost 40%, 39% from the same time last year. Last year, we had 606 homes sell in December of 2021. This year, December of 2022, we had 372. So a dramatic drop. Another indicator of the drop in activity, very easily identified as a side effect of the increased interest rates. And now that interest rates are coming back, I actually did a check yesterday for the area, and I was seeing interest rates for home purchases in the 5% range, the mid 5% range. So that's a very good improvement from the peak of 7% for a lot of folks. So that's actually good news, I think, and may be an interesting dynamic in the upcoming months in 2023. Original list price. Now, this is one I like to share because this is the goal here is to figure out the psychology of sellers as they go into the marketplace. So what this listing price is the first price that was entered on the listing agreement when that seller listed the home. So this is going into the process of selling their home, what the seller either wanted to get or expected to get in terms of their list price. And we can see from the same time last year, on average, sellers believed their home should get 13% more than it did last year. Now, last year, the average original list price was $1,279,000. This year, it was $1,439,000. So a pretty substantial increase. And we're actually going to see here in a moment, when we compare this to the actual sales price, how that isn't really in line with what expectations should be in the San Jose market. So let's go ahead and take a look at that. Now, remember, we had sellers expecting 13% more than last year. The reality is, on average, they're getting 10% less this year. Last year, the average sales price was $1,355,000. This year, $1,222,000 for about a 10% decline. So there's still a bit of a disconnect, but it's actually not as bad as some other communities. In fact, aside from Gilroy, which seems very calibrated to the realities of the current price structure, San Jose at least was a little bit more in line with the market versus places like Morgan Hill and Santa Clara County overall. So San Jose is a little bit more calibrated, but I think they have a little bit more adjusting to do, a little bit more realizations to come to. And we're going to talk about how many of them are making those changes for homes that are currently listed in terms of what homes have had price reductions in the month of December. But we'll check that out in a minute. Next, percent of list price. Now, this is one of those numbers that was really crazy when the market was up a year ago. As you can see, last year, 109.3%, meaning that if you listed your home, you were getting 9.3% above your asking price on average. Gigantic change from the same time last year. Obviously, a factor of the reduced demand from buyers as a result of market difficulties, specifically relating to interest rates. But this year, in December of 2022, that number was at 98.6%. So 1.4% below asking price is what sellers on average are actually getting for their homes, which is a 10.7 overall percentage decrease, the delta between those two numbers. Now, in terms of days on market, I know that for those of you who watch my other market analysis, the one thing I've always been saying is this is a number we ignored for a very long time, simply because it was artificially defined. It was a number that was listed in the listing agreement. They would simply say, we will not look at any offers until such and such a date at such and such a time. And typically that was anywhere 10 to 17 days from the day it was listed, just to make sure everyone had a chance to look at the listing, give it a 2 or 3 weekends for folks to be able to walk through. And sellers just wouldn't consider any offers until then. And then they'd get anywhere from 10 to 30 offers, depending on where the home is located. This time around, we've got real numbers. In 2022, in December, we're seeing 28 days is the average days on market. That's up 87% from 15 days in December of 2021. And we're at that point now that I sort of call the psychological barrier in terms of days on market. 30 days is a out there number of days that I think sellers, if they've been sticking to their list price, start to perhaps soften on it a little bit, thinking, wow, we've gone 30 days without getting this sold. Maybe we need to do something different. Now, if you're someone who's out there considering listing your home, or your home is listed and your home's been on the market for almost 30 days, if you haven't already had a conversation with your agent about how to address this problem, you really need to. In my standard operating procedure, when I have a listing, I do 7-day assessments where I assess traffic to the listing in the various, like Realtor.com, Zillow, those types of things. How much attention is it getting? How many views versus how many saves? How many calls have I gotten? How many email requests for information, etc. And I have brackets of data that I've accumulated over decades that tell me I'm either in the sweet spot of we're doing well or we're not. So that's a conversation we need to have, that you need to have with your agent, to define, how do you make things work here? How do you get to the point where you're not sitting on the market for hundreds of days, losing money every day that you delay, and chase that sales price down as the market continues to decrease? So it has gone from being one of the least important numbers to one of the most important numbers. At least it's an easy way to gauge what's happening with your transaction and with your attempted sale of your home. So just make sure and pay attention to that and have a conversation with your listing agent. If you're a buyer, when you see homes that have been on the market for 28, 29, 30 days, I want that to be your clue that you may be able to come in and make an offer that wouldn't have been accepted by that seller 2 weeks ago. They've reached a point where if it hasn't sold at this point, there are things that need to happen, and 9 times out of 10, that thing is a price reduction. So keep that in mind as a buyer. These are great ones to consider. I've even had in the past, when we had markets like this, where I had certain buyers who wanted to only look at homes that have been on the market for over 25 to 30 days because they wanted to have that higher probability of getting their offers accepted. Doesn't always work. I think it gives you a slightly better chance, but it's definitely something to consider as you're navigating your way through the market to try to secure a home that you're going to love living in. Okay, so now let's take a look at price reductions in San Jose. Now, what this reflects is the total number of homes in December that had a price reduction. And why this is important is I believe that this is one of those numbers that's far more relevant now because of the dynamics that we have already talked about. A moment ago, we were discussing how while only right now, in the month of December of 2022, we had 38.8% of homes currently listed had a price reduction. Last month, it was 42.2%, so it's a little bit down from the previous month. But as you saw from the average list price for December of 2022, these numbers are still completely out of whack. So we are seeing, on average, sellers coming into the marketplace with inflated asking prices. So I think this number stays high as we move forward into 2023, and as the realities of what these prices should be starts to set in. So keep that in mind as we go through this, and particularly as we remember what those list prices were that are still very much out of whack in San Jose. Now, another thing I like to do here is get a little bit more in-depth into these numbers. We're comparing average numbers, median, max, but then also comparing it to the days on market numbers that we're seeing for these properties, because obviously there's going to be a correlation between being on the market for a very long time and realizing you need to reduce your price. So let's go ahead and take a look. The average price reduction was $153,459. So a substantial amount of money. The median, and remember, the median is the number at which half of these price reductions are above it and half of the price reductions are below it, is $97,000. So that tells us that while the average is higher, that means there were some at the top end in terms of amount of reduction that were very high. So we'll talk about that in a minute as well. Now, in terms of the lowest reduction in list price, we had $112. We're going to talk about that in a second. I do not understand the strategy between a $112 price reduction. It doesn't make sense to me. We'll try to figure out why someone might do that. Next, the highest price reduction, $1,800,000. And we had a grand total of 100 homes that had price reductions. Now, if we look at these numbers, we can see the highest one, as I said, was a $1.8 million reduction, but then the next closest was $1.4 million. And here's what's interesting. That did the job. So once this did its price reduction, it sold at the end of December. So, and that had been on the market for 90 days. So someone clearly recognized that they had a problem and addressed it. What's interesting is they had done a price reduction to 2.6 million from almost 4 million, and it still ended up selling for below asking price at 2.3 million. So that's where this market is. And of course, things are very different at that level. That's what you would definitely in San Jose call the luxury purchase level. And the dynamics there are very different. So it's a whole different conversation in terms of pricing strategies, how you get attention, and all these other types of things that play into it. Then at the other end of the spectrum with that lowest price decrease, what's interesting is this is a home that's a little bit above the average. Well, it's quite a bit above the average sales price. It's not that far above the average list price. It was listed at just shy of 1.7 million, 1.699. And the price reduction during that 24-day period that it had been on the market was only $112 down to $1,698,000. And I do not see a reason why that was the number. If you're trying to do bracketing, which is something I've talked about in my podcast and some other how-to videos I've done in terms of coming up with pricing strategies, those kinds of things. If you analyze a market, you can oftentimes discover that there are price brackets that have higher levels of activity, right? And what's really weird is, while typically the usual example is activity increases the lower you go, but there is a low point where obviously activity actually drops off from higher priced. And every once in a while, you'll have one that skips, where you have a price bracket where there's a ton of activity at, say, 1.2 to 1.5 million, and then 1.1 million to 1.3 or whatever. That bracket suddenly gets a dramatic drop, and then the next bracket below it gets a dramatic increase. So, you want to try to move into the bracket that has the highest level of activity. And this does not do that. So I have no idea why an agent or a seller would think that a $112 price drop on a home where they're asking almost 1.7 million is going to sway anyone to take a closer look at that property. Don't know if that was a mistype. Maybe the intention was for that to be 112,000. I don't know, but as it is, it's $112 and it hasn't helped. It is still on the market and it has not sold yet. Now let's go ahead and compare this to days on market, right? The average days on market for homes on this list is 79. And remember, the average days on market overall in the marketplace was 28. So more than double, right? The median was 71.5, which means half of the homes were above 71.5 and half of them were below 71.5, with a maximum of 248 days. So we have some properties on here that have been on the market for 245 days, or 248 days. And not surprisingly, this is a home that's at the higher range. I actually took a look at this property earlier, and this is one where if you are a seller, and even at these price points, right, and we're talking some pretty substantial price points, and then we've got some others that aren't, that are under 2 million, for instance. If you've been on the market, and it's amazing how many of these are over 100 days. So many conversations need to happen between you and your agent when you reach certain milestone dates. And again, These are conversations that I would suggest are happening weekly, and at the very least every other week. If you've calculated what the average days on market is and you've reached that date and you haven't sold it, and you're basing that on the comparables, right? Because I get that the average days on market changes for different price points. But when that market analysis was done for that home, there should have been a days on market for comparable homes. And once you've gotten to that point, concern should be setting in and sellers should be having some serious conversations. The reason why I'm harping on this one and dwelling on it a little bit is this is critical because particularly at these higher price points, at these luxury levels where we're talking, $4 million, $5 million, $6 million, $3.5 million. And these ones that are far more reasonably priced that have still been on the market for over 100 days. There's one here that's only 600 that's been dropped to 599,000 that's been on the market for 116 days. You are going if this is a situation where you need to get this sold, you're marketing it seriously now because this needs to succeed. As every day passes, you are going to get less and less for it. So you're chasing your price down every day that you delay. So definitely don't let this continue. If your home has been on the market this long, particularly these homes that have been on the market for 100 days, you're clearly in a scenario where something needs to change. And please have this conversation. You're only hurting yourself by not either being comfortable with not being on the market anymore or adjusting your price so that you can get sold in the market as it currently exists. All right. And the lowest number of days, and this is one I always like to see. So someone adjusted the price on their home after just 8 days. They did it by $100,000. And let me just applaud whoever did this. The home price had been $1.475 million. They reduced it to $1.375, and the home sold. So perhaps after that first week, they had noticed no traffic, nobody coming to look at the house, and they went ahead and dropped, or this agent did a great job of keeping up with what was happening with pricing trends in that local area with homes of that type and suggested a price drop after 7 days, and then it immediately sold. That is a win. That's a win for that seller. Don't think that that seller lost out. If they had waited longer and that home just closed, last week, if they had waited longer, they would have made less. So this is a win given what this seller was facing in the marketplace. All right. As always, folks, the goal here is to leave you with far more knowledge on the table than I've taken up in your time. I hope that we have succeeded today. I think we have. This is some good data and hopefully some good advice for folks out there to pursue their home selling or home buying goals. And of course, I am available for consultation if you would like to work with me or just give me an opportunity to discuss how I can help you achieve your goals. Feel free to reach out to me at soldbyrobert.com, where you can find the contact me page and all the tools I provide to my buyers and sellers. Happy to help in any way I can to help make your real estate dreams come true. Thanks again for listening. I'll talk to y'all next time.